Hey guys, hopefully there's sound being played. I've been going through some technical difficulties. I'm Tricia Turner. This is Rise and Thrive. Want to go through a little bit of today. Normally there's a guest on here, but the market's been so crazy lately. Our schedule's also been crazy. So I've been a little inconsistent, but Rise and Thrive is a podcast that's been running in different names and such for about 4 years now. Used to run in the mornings. Now it's Tuesdays at 12 o'clock Central Time. Purpose of Rise and Thrive, of course, is to go over the four pillars of the things that are most important in my life, that being faith, family, finances, and fitness. Being in the real estate industry for 22 years now, naturally, I have a heavy pulse on the real estate market. I am in the Houston, Texas market where I've been my whole life. I am a native Houstonian. And so I've been in real estate for 22 years right here in this market. I am a real estate broker with Realty of America, and I run a team. Today, you guys, I was going over a little bit of market data this morning on Rise and Thrive in our Rise and Thrive community, which is a community that we run every morning via Zoom, 8:30 a.m. to 9:30, 9:15, 9:30, talking about the market. Here we are as of today, we're October 20th, just to put a date on this, 2025. Mortgage interest rates are a little over 6%. We literally just locked a loan with one of our buyers 30 minutes ago at 5.5%. So great interest rates compared to where they've been for the last couple of years. In fact, we're looking at some areas where it's like an amazing time to buy, not only because you can get a great deal on homes, but also, of course, because rates are lower than they've been for the last 2 years. When I was looking at the data and listening to the data this morning, it's interesting to see where we are today. When we look at where interest rates are, and the 10-year yield, just so you guys know, is like right at 4% today, slightly under, like 3.99, some of the reports, which is crazy. And you're looking at our ever or never changing interest rates, I would say. They've been hovering about 7.5% earlier part of the year. Now, in the last few months, especially, we've seen them get below 6.5. Once they got below that 6.5 marker, and now they're hovering right above 6%, things changed dramatically. The data shows that once we got under that 6.5%, it actually unlocked 1 million more buyers to the marketplace, right? When we get under 6%, supposedly it could unlock 6 million more buyers. Well, how much more under 6% do you have to get in order to unlock that? There are some economists that believe that we'll see 5.75 by the end of 2025, which is just a couple of months away. Will we? I think we will. But if you're a buyer and you're out there waiting for us to get from where we are today, 6.1, depends on your credit score, of course, to 5.75, is that a big difference in your housing payment? Not so much. Is it going to be life-changing for you? Definitely not. Will it sound better, though, for a buyer? Yes, of course. Oh, I got 5.75, 5.8. Always sounds better under 6%, right? When you look at what's to come, what's expected, well, again, we've been saying this for over 3 years now. We don't have a crystal ball, and we do think things are going to improve. I was listening to a report this morning, and the economist was talking about the housing market, and he was talking about on a national level. Now, I'm here in Houston, Texas, where we are in a full-blown buyer's market. We have been in a buyer's market all year long, all 2025, but it's actually gotten greater and greater and greater for buyers as we have approached fourth quarter, of course. What are we looking at? Crazy. Normally in the real estate world, and I'm going to share let me share one of my screen images with you. Let's see if I can pick it up. So normally, it's probably not going to show it. Let me see if I can show this screen to you. And let y'all see this data that I'm looking at. Okay. So when you look at the data that I'm looking at here, you're looking at new listings. This is on a national level. And when you look at this data, what I want you to look at, Here on the left side is number of listings. Now, to get us into a healthy market, they'd like to see 80 to 100,000 listings, okay? Here we've got all the way back from February. Where were we at? This is January. See how our listings go? We're acquiring more, acquiring more, acquiring more, all the way up. Look, here we go. And these are different years too, just so you know. So the gray is 2022. The pink is 2023. Here we are, red, 2024. And then maroon is 2025, okay? So if we're looking at data, look how cyclical it is. So if you're tracking data, traditionally, most homes are listed in March and April and then sold in April and May. I don't know why, but it just works out that way. If you're looking at our data here, here was January. Let me get into the maroon one. 2025, inventory down, right? Then by February, we started increasing inventory, increasing inventory, increasing inventory, increasing inventory. This is 2025 number, increasing, 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 little dip, continued increasing. Then we got to June 2025, right? Dip in inventory. Okay. And then we're coming back up, 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 up. Now, when you get to about here, July, mid-July is usually when it happens, 2025. Now you start to see listing inventory decline. Now we're here in August. Now it's leveling off and then another dip. Now, this is traditional when you look at the real estate market. It's seasonal, right? In a normal market. And even though we have not seen normal markets, these graphs are pretty consistent with what you can expect seasonality. What you can also see, though, is that there's a drastic drop right here, of course, at the end of the year, because it's the holidays. A lot of things in real estate are relative around the holidays. Interestingly, though, like we're in listing appointments all the time, and I'm telling clients, I'm like, even though we have fewer homes on the market right now, and of course, fewer homes coming on the market, it is still an amazing time to sell. A lot of people right now, especially, are looking at year-end bonuses, quarterly bonuses, money that they're going to have for year-end to put towards a down payment because it's an amazing buyer season in the Houston market. I can't speak for all markets, but I can tell you that in the Smile states, which are of us in the southern region, you're seeing more opportunity, buyer opportunity. Is it a great time to sell for a seller? Maybe, maybe not. If you put your home on the market and it's priced right and it looks amazing, will you be successful? And you're with the right real estate professional, of course, likely so. All of it is relative to what's going on. Keep in mind, right now we're in a government shutdown, where there's tariff wars going on. There's all kinds of crazy stuff. People are expecting the interest rates to drop a little bit further, even though they're at a place where data is showing we could be coming into a balanced market, especially if they go to 5.75 and then actually stay there for a term. What's happened over the last couple of years is they've been volatile. They're up, down, up, down, up, down. You can see right here, mortgage rates are near year-to-date lows with the 10-year yield at 4%. This marks the third time this year we've attempted to break through that key level in the bond market. The fact that we're having this discussion indicates that many who claimed higher rates were inevitable due to inflation, tariffs, federal debt, deficits, and treasury supply have overlooked a fundamental principle. 65 to 75% of where the 10-year yield and the 30-year mortgage rate can go is still determined by Federal Reserve policy, which is just crazy. So when you're looking at data, this is mortgage applications. This is the index here. It's following a similar pattern that it did in 2024. 2024 wasn't, of course, our greatest year when you look at overall sales. 2025 may mimic the same. So there's been 19 positive readings, the weekly data so far, 15 negative readings, 6 flat prints, 37 straight weeks of positive, though, year-over-year data, which is good. 24 consecutive weeks of double-digit growth year over year, also good. We love to see this stuff. This is taking us in the right direction, okay? Pending sales, you'll see this again. It's that time of the year when pending sales traditionally decline anyway. They start to build up in spring, as you see here in the graphs. Then there's cyclical, holidays, summer, all of this stuff, then a steady kind of decline. You're going to see that. Things have been very unstable or were very unstable last year because interest rates were so up and down and you couldn't figure it out. Here's the conclusion. Overall, the housing market in 2025 isn't as dire as some people suggest, especially considering the challenges we faced. If mortgage rates had remained above 7.25, as some had predicted, the situation would be very different. However, lower mortgage rates have had a positive impact once again, similar to what we saw in late 2022 and the middle of 2024. The key difference this year compared to last is that mortgage rates were on the rise at this time last year and eventually exceeded 7%. So when interest rates got above 7%, people stopped buying. So it says, just imagine the potential if we could maintain rates around 6% for a longer time frame, which is something we have not been able to do in many years. So we've still got to wait for the Federal Reserve to meet. The CPI inflation reports comes out on Friday. I want to show you guys another slide. Let me show you another thing that I like to watch. Okay. So what you're seeing here, now again, I am in the Houston market, so I'm showing data on 2 counties that I study. This is what I like to look at. This is Fort Bend County. This is Harris County. So if you're seeing this and you're listening to this, this is definitely a more localized report than a national one. That was a national one that I just read to you. This is stuff that I study every day. This is market temperature, what it's showing you right here. See this line across where it says buyer's market on the left-hand side, seller's market on the right, and it puts our little temperature guide in the middle. This is not correct. I have been doing this for 22 years. Want to know something interestingly? In February of this year alone, we started seeing price reductions, and actually across the nation almost, except for in the states that are still in a seller's market, which is mostly the northeastern states, okay? So we started seeing price reductions in February, which was unheard of. As of today, 41% of listings nationwide have went through a price reduction. 41%. What we're seeing is that sellers, many, not all, many sellers believe their home is still worth COVID pricing in 2021, which is not true. And many buyers, because of media or something that they're following or someone that they're following, believes that homes are at a 2009 market, which was smack dab in the foreclosure market. Also not true. What we're in is an unpredictable market, clearly, one that doesn't make sense, clearly, and one where buyers and sellers are like, I don't know what to make of this. A confused mind just says, no, I'm not going to do anything. And then we've got government shutdown. We've got trade wars. We've got craziness in our world. People are just like paralyzed, right? We've got jobs being eliminated because of artificial intelligence. I mean, what do you think is going to happen? When you look at the job report, it's common sense, guys. When there are jobs being absolutely eliminated, like their position altogether because of artificial intelligence, why is that? Because now, if using artificial intelligence correctly, you can eliminate, or one person can do the same job of 4 people, then you can get rid of 3 of those people, right? So when you look at the jobs report, do you think that it's going to improve? I don't think so. I think we're going to see more people become unemployed. Unfortunately, that's just evolution. That's innovation. That's where we are. You know, like they said, the launching of artificial intelligence is just as big as when the internet itself launched. So we're just beginning to see this. All right, back to market data. I get sidetracked there. Okay, Harris County and Fort Bend County. Number one, we're not in a balanced market. We're not yet. Are we building towards one? Likely. Will we probably get into one in 26? Probably. Here's what's happening. Fewer homes are being put on the market. In fact, the reports are showing that we're seeing less inventory, listing inventory coming on the market than was predicted. Therefore, If that continues with sellers being reluctant to put their homes on the market and buyers more willing to buy now because rates are more favorable and will likely continue to improve, you'll see the homes that are on the market go off the market, hopefully, right? And then if we have fewer homes coming on the market, then that puts us going into 2026 at a much lower inventory level, right? Relative, of course. And then, of course, you've got seasonality. So typically in the southern states, especially, our market will start to get active like first week of February, second week of February, and then really starts ramping up depending on the weather, depending on the world, depending on interest rates, all things considered. But that's kind of the pattern that it follows. However, what if we don't get a winter? What if things stay weather-wise moderate? What if interest rates go to 5.75? Will we see this ramp up and us get into a really good buying and selling season? I think we will. So I think in 2026, you will see this be for real, a balanced market, which is great. A balanced market means there's 4 to 6 months of listing inventory on the market, meaning if no other home was listed on the market after today, it would take us 4 to 6 months to sell off everything on the market. That's what that months of inventory means. Where are we at right now? According to the data, we have 4 months right here, as you see, of inventory in Fort Bend and Harris County. That would show a balanced market leaning towards a seller's market. Anything under 4 months of inventory is leaning towards a seller's market. We are not. Crazy thing. And here's, you guys take notes of this if you're in real estate. Here's a pricing strategy. The data shows that if a home is priced at market value and we're in a balanced market meaning 4 to 6 months of inventory, the home should be able to list at market value and sell for 97 to 98% of list price. Look at the data. This is how confused it is. It shows that there's 4 months of inventory, so homes should sell between 97 and 98% of list price. Here's what they're actually selling for in Harris and Fort Bend County. Over here on the right, 95% of list price, okay? 95. What does that mean? That means buyers are not paying list price or even close to list price. They're getting homes for sale. Homes are on sale. Does that mean that homes are listed too high? Likely so. Are people having to adjust their pricing? Yeah, they are. That's what you're seeing in the market right now. Average days on market, according to the data, is showing it's 38, which is down 26%. Pending sales are up 10% to 5,277 in these two counties. Total active listings in these two counties, 20,757, up 11%. And our total closed sales for the counties with a monthly average of 4343, up 18%. This pricing strategy that I just told you about, if this were accurate, you would see this little thing over more towards a seller's market, because once you get under that 4 months of inventory, now you're teetering on a seller's market. And the data will show you that if you're in a seller's market, such as 2 to 4 months of inventory in the market, you should be able to price that home about 5% over market value and it will sell. If you price a home over 5% of market value right now in this market, it will not sell. It will sit. So that is wrong. A buyer's market, just so you know. In a buyer's market, if there are, let me stop share too. In a buyer's market, which is anything over 6 months of inventory on the market, in a buyer's market, the data shows that you actually have to price a home about 5% below market value, and that's where it will sell. I just showed you guys and told you guys a graph where in Harris and Fort Bend County, homes are averaging 95% of list price. That's 5% below where they're listed. You hear that? Follow that. Okay. These numbers, y'all, are critical. If you're in real estate and you're not studying this stuff, you need to. And if no one's showing you where to find the data and no one's teaching you about this stuff, you probably need to look at who need to pay attention to who you're paying attention to. You need to join our Rise and Thrive community for once. Reach out to me to learn how to do that, because I go over this stuff every morning. And we also teach artificial intelligence so that you do not become obsolete. The data shows, fun fact, this is something I listened to this morning. Years ago, people, the travel agent job actually, it was becoming obsolete and did become obsolete. I actually know people that were travel agents and they're like, I don't even have a job anymore, because you could go online, you could go to Expedia, Travelocity, all these sites, book your own travel, get it for a discount, plan your whole trip. You don't need them, right? Much like with a lot of this online shopping stuff. Well, now, of course, with artificial intelligence, and we use ChatGPT, but with artificial intelligence, you can actually go in and have, we've done it. We've created a our ultimate travel planner. We have as one of our GPTs, right? Well, data shows now that the occupation travel agent is back on the map. It's back on the rise. Why? Data shows that, remember what I said, a confused mind just says no. Data shows that the consumer is inundated with data, right? ChatGPT is giving them all this data, but then they're going and comparing it on all these other sites. They're talking to people. They're like, I don't know what's best for me. I don't want to take the time. There's too much information. I'd rather hire someone to do it for me. So I can be like, here's where I want to go. Here's my dates. Here's how much I want to spend. Please map this out for me. In the real estate market, data is showing that, and this came from multiple economists, in order to finish 2025 strong and have an amazing 2026, data shows that the skill set you should be sharpening right now is becoming the local expert. You need to, yes, look at national data like I just showed you, know national data, know the facts, know where we are, know what homes are selling for. Are they appreciating? Are they depreciating? Is it a good time to buy? Is it a good time to sell? What's my home likely to sell for? What is it really worth? Like, all these things are relative. Be able to go online and show your people, if you buy today, this is how much you're going to cost, or how much it's going to cost you, or how much you're going to save. Be able to do these analysis. But as a real estate professional, in order for you to actually be valuable and the consumer see you as valuable, you have to be the market expert. You do. You've got to be a local market expert. You need to know your neighborhood, know your communities, know your zip codes, know your counties. Like I'm studying, I study this stuff constantly, because if you're not studying this data, you're number one going to get hit with questions by these sellers. You have no clue what the answer is, and you're just going to wing it. I believe artificial intelligence and the market that we are hopefully coming out of, no, we are coming out of it. I believe it's going to expose those agents that have just been winging it all this time and don't have a clue how to do real estate. You can clearly see, and I'm in and out of homes every single day, whether they're for buyers, whether I'm analyzing properties, it's all things real estate every day in my life. Know that. I can walk into a home and almost instantly know why it didn't sell. Instantly. And I look online all the time at homes and I'm like, oh my gosh, like these poor sellers, it's never going to sell. This agent's unskilled and untrained. They don't have a freaking clue how to price this home. They don't have a clue. There's a pricing strategy, like I just told you guys a little bit about. There's also a price reduction strategy. When do you do it? How to get into another bracket? All of that, everything. But so many agents just go on there and wing it. And they, number one, let the seller steer the ship, which you never should do. They're paying you to guide them and to be that expert. So my hope is that we get laser focused on becoming, like, in my world, in my group, they are trained at a high level. Know that. Anyone affiliated with me, I'm constantly training. Speaking to all these other agents and brokers out there in the world, guys, do better. Like, let's embrace technology. Let's embrace the market that we are coming out of. I believe 2026 is going to be an incredible market. I think there's going to be a balance of buyers and sellers on the market, so then everybody's making money. And I think that what you guys need to realize, and not in all markets, I'm speaking especially in the Houston market, that your home is not worth what it was worth in 2021. There are a lot of people that bought their house in 2021 not in all markets, but in many, and they overpaid. A lot of you really overpaid for your home, and that's unfortunate. That was a market we'd never seen before. It was COVID. It's a COVID market, never seen it before. We're not that market. So you as the seller, if you're looking for real data as to what your home is really worth, when you receive that real data, if it's from a trusted source, recognize that that's real data. The numbers are down right now. The numbers are down significantly. I run value every single day, and I'm telling people, I can't tell you what your home is going to be worth in 30 days. I can tell you that maybe in 30 days from now, it will be worth less because I'm going back. I'm looking back. What was their home worth in March? What was it worth in January of 2025? And guess what? Most of the time when I'm running this, it was worth more then than it is today. As you look at homes that are selling for 95% of what they're listed for, this isn't a doom and gloom report by any means. This is just for you to understand data and for you to be able to comprehend the market so you can make good decisions and understand it. So you are educated, okay? If homes are selling for 95% of what they're listed for, and an appraiser appraises a home based on what homes are selling for around it, in 90 days from now, what do you think homes are going to be worth? Are they going to be worth more because people were selling for 5% less? That doesn't make sense. No. Think about it. Final thoughts. In the fourth quarter of the year, best time to buy new construction. Best time. If you're a buyer, your closing costs are going to be higher at the end of the year. You need to understand this stuff because people, real estate agents, not all of them are skilled and trained, so they don't even understand it. Real estate agents will give you a number and they're like, oh, it's only going to take you this much to buy a house, and it's only going to be this much down payment, this much in closing costs. It's all depending on when you buy that home. If you buy a home in January versus November and December, two completely different closing costs. Completely. Okay. Also depends on if you pay cash or if you finance. Completely different. If you're a buyer and you want to do an FHA loan, okay, your closing costs will be higher. You may come to the table with less of a down payment, but your closing cost will be higher. That's a fact. So know these. That's why it's imperative that you are partnered up with a great, amazing real estate expert advisor and a mortgage professional. Those two go hand in hand so that you understand how much it's going to cost you to buy a house, how much you're going to need at closing, all of these things, because they're relative. Should I spend money right now to buy my rate down? I wouldn't. If it were me, I would not. Why? Why would you? Unless you can buy it down significantly for not a lot of money, which you can't right now, I wouldn't. Sellers, know what the market is doing. Number one, know what your home, the real value of your home is, not what you think it is, not what your tax assessed value is. That is not the value, not what Joe Blow's house next door sold for or listed for. That's not your value. Talk to an expert advisor. Find out what the real value is of your home today and know that it's likely changing every 30 days right now, possibly. And then if you are thinking of selling, there's three numbers. Number one, what's the real value of my home? Number two, what's it likely to sell for? Because that's critical. And number three, then how much do I put it on the market for? Because the real value of your home and what it should go on the market for are probably two completely different numbers. Because remember what I said, in a buyer's market, which we are in a full-blown buyer's market in Houston. You have to price it under market value in order for it to sell. So these things are key factors in what you can expect when you're thinking about buying and selling right now, especially if you're in the Houston, Texas real estate market where I am. That was more localized data than I typically do. Now, if you're a seller and you're thinking, well, then I'm just going to wait until March to sell my house. Well, guess what? Number one, half the world thinks like that too. So you're going to have a lot more competition on the market. And number three, what if in the next 60 days, as we approach the end of the year, homes sell for less in your area? Do you think your home's going to be worth more in the spring or less? I'll leave you guys with that final thought. Real estate agents, if you are not getting trained at a high level, you got to join our world. Like we are with Realty of America. We are a cloud-based program, but you know what? It's completely different. Like EXP and Real, they're also cloud-based. What's super cool about us is that we're only a year old. So we're in our infancy. We're in build mode. I'm one of the Texas growth leaders. And we're looking for people that want to grow something big because we are going to build the greatest real estate company in America. We have the foundation built and now we're just implementing. We have markets opening up. We're in 18 different states right now. Super fun. So we're looking for people that want to grow with us and be part of this foundation that we're stacking. It's actually really cool and fun. Second thing, you're looking at an industry with big conglomerates that are coming together. Why have they come together? Why are they merging? Why do these things happen? These things happen because there's strength in numbers and we're better together. And when you look at overall expenses, it's cheaper and more profitable to run if you can eliminate some of your expenses or share expenses, of course, right? So you're seeing a lot of that happening. At the end of the day, my belief is that you as the real estate agent, you've got to be in control of your destiny. You've got to be able to be that market expert. You've got to be part of a company or with a company that is possible for you to actually make a living at. You know, a lot of these old franchise models, they're on 80-20, 70-30, 60-40 splits. You'll never have ownership in the company. They don't give you anything for that market or what they're taking in their splits. I don't know, for me, or for common sense, it just shows you that it's a dead model. But moving forward, you guys, you've got to become the market expert. You've got to get around people that are training you at a high level, people that have office spaces for you to go to. I know here in Houston, we probably have 10 Realty of America offices already. Because we believe in that. We believe that you should come and be part of a sales meeting and learn to train. You can't just watch videos and figure it out. Some people can. Most people have to be held accountable and have to be trained in a person-to-person environment. So Rise and Thrive is a community that I run. If you want to learn more about that, you can go to joinriseandthrive.com, I think. I gotta double check. Reach out to me. I can hook you up with that. I'm Tricia Turner, by the way. You guys, if you want to know more about market data, your area, what's it likely to do in the next 4 to 6 months as we move into 2026, reach out to me. Happy to help. Always, I run data for people every single day. I run numbers for people every day. Have an amazing day. Remember, together we rise, together we thrive. Bye, guys.